Previously, we have learned how to recognize source documents that relate to cash transactions. For example, cash receipts and EFT documents may be used to verify cash receipts, while documents like check butts and ATM documents may be used to verify cash payments. Then we look at recording cash transactions into two special journals, the Cash Receipts Journal and the Cash Payments Journal. In this video, we're going to be looking at reporting this information in the cash flow statement. The first step is to classify the items in the cash flow statement. The best way to prepare the cash flow statement is to work from the bottom up. We start with the financing activities, where only 4 items are reported here: capital contributions, drawings, loan from bank, and principal loan repayment. Then, we classify the items in the investing activities section. Only items related to non-current assets are reported here. It could be a purchase of non-current asset or a sale of non-current asset. All other items are reported under operating activities. Things like cash sales, GST received, GST refund, GST paid, GST settlement, receipts from accounts receivable, payments to accounts payable, wages, and interest expense. Basically, any items that are not reported under financing or investing activities are reported here under operating activities. The first thing that I want you to note is that interest expense is reported under operating activities, even though it's related to a loan. On the other hand, the principal loan repayment is reported under financing activities. The other thing that I would like you to note is that GST paid on any purchases or expenses, including purchases of non-current assets, must always be reported as cash outflows under operations. The items that need to be reported in the cash flow statement can be found in the Cash Receipts Journal and Cash Payments Journal. So here we have the Cash Receipts Journal, and here we can see that we have received $4,100 for painting fees. This is reported under operations in the cash flow statement. Next, we look at the sundries column. With sundries, we must always see the specific classification of each item that was recorded under sundries. In this case, we only have one, which was a capital contribution from the owner. Capital contribution needs to be reported under financing in the cash flow statement. Lastly, in the GST received column, this is the amount that has been received from the customers as part of the painting fees paid. We report GST received under operations in the cash flow statement. Next, we look at the Cash Payments Journal to identify the cash outflow items that need to be reported in the cash flow statement. So similar to what we've done with the Cash Receipts Journal, we look at the specific classification of the transactions to know what to report in the cash flow statement. So we start with the wages, where the total is reported under operations. Drawings is reported under financing. Paint, which is paint supplies, it's reported under operations. And the sundries, as mentioned before, we do not report the word sundries in a cash flow statement. Instead, we identify the specific items, which in this case is new equipment, which is reported under investing. And another sundry payment would be van service, which is some sort of maintenance expense, and this is reported under operations. Lastly, we have GST paid that has been paid as part of the purchases and expenses that were paid in the month. And GST paid is a cash outflow that is reported under operations. Once we have worked out the classifications, we now proceed to write the amounts of the cash inflows and cash outflows in the cash flow statement. Here's a cash flow statement, and in here we report the cash inflows and cash outflows for the business. We start with the cash flows from operating activities. Here we have painting fees and GST received, which are both cash inflows for the business. So remember, when the business charges the customers for painting services done, it charges them for both the fees plus the GST amounts. When we receive the payments from the customers, it will be for the total amounts, including the fees and the GST. However, when we are reporting them in a cash flow statement, we separately report them under the operating activities section. Now let us have a look at the cash outflows from operating activities. Here we have wages, paint, and van service, which are all cash outflows from operating activities. Take note that GST paid is also reported under operating activities. Now, GST paid are basically the GST amounts that are part of a purchase or payment of expense, which in this case would be GST on paint supplies purchased, GST on van service paid for, and GST on the purchase of new equipment. Now, it doesn't matter that there was GST paid as part of a purchase of new equipment. We still need to report all GST paid amounts under the operating activities section. In the investing activities, the purchase of new equipment is reported as a cash outflow at its price, excluding the GST amount. Now moving on to financing activities, here we have a cash inflow from capital contribution, as well as a cash outflow from drawings. The last thing that I would like you to note here is that we use brackets to show all the cash outflows. So in this next step, we'll be calculating the subtotals in the cash flow statement, and at the end, we'll be calculating the change in the bank balance. So remember from the previous video, if we have more cash receipts than cash payments, this will lead to a cash surplus, which increases the bank balance. Whereas on the other hand, when we have more cash payments than cash receipts, this will lead to a cash deficit, which decreases the bank balance. Now back to the cash flow statement, we will be calculating the subtotals of the items that we have reported. So we start off with the operating activities by adding up the cash inflows from painting fees and GST received. This gives us a total of $4,510, which we write in this column. Then we add up the cash outflows, and this gives us a cash outflow of $2,600, which we report using brackets to show that this is a cash outflow. The next thing that we do is to take the cash inflows minus the total cash outflows to give us the net cash flows from operations. And this works out to be $1,910. Note that this is a cash surplus because we have more cash inflows from operating activities than the cash outflows from operating activities. So therefore, this will increase our bank balance by $1,910. Now moving on to investing activities, here we have a cash outflow because of a purchase of new equipment. And the cash outflow is $1,500. Because there is only one item here, we do not need to write anything in this left column. And we write the amount straight away in the right column here. Now we add up the amounts, and in this case, because there was only one item, we can work out that the net cash flows from investing activities was a total of $1,500 cash outflow. Now on to financing activities. Here we have a cash inflow from capital contribution of $700, and we also have a cash outflow from drawings totaling to $900. Again, because we only have one item for each, the cash inflow and the cash outflow, we don't have to write anything in the left columns, and we write the amount straight away in the right hand side. Then what we need to do is to take the cash inflow minus the cash outflow to give us a net cash flow from financing activities totaling to $200. Here, because we have more cash outflows than cash inflows for financing activities, this is why we have a cash deficit of $200 written in brackets to show a net cash outflow. Once we have calculated the net cash flows from all three categories, which were the operating, investing, and financing activities, we can now add up all these amounts to calculate the net increase or decrease in cash position. So we start off with the net cash flows from operations, which worked out to be a cash surplus of $1,910. This means that we had more cash inflows than cash outflows from operating activities. Then we had a cash deficit of $1,500 from investing activities, and we had another cash deficit of $200 from financing activities. This meant that we had more cash outflows than cash inflows from financing activities. Now what we need to do is to add up these amounts. So we take $1,910 minus $1,500 minus another $200 to give us a net increase in cash position of $210. We can also think of it as a cash surplus of $1,910 minus a cash deficit of $1,500 and minus another cash deficit of $200 to give us a net cash surplus of $210. So here we have a net increase in cash position by $210, which is a cash surplus. This means that overall we had more cash receipts than cash payments in this period. We then add this amount to the bank balance at the start, which we are told is $420. Now the opening balances will be provided to you in the question. We add the cash surplus to the bank balance at the start to calculate the bank balance at the end, which works out to be $630. So here we can see that the cash surplus has indeed increased our bank balance, giving us a higher balance at the end of the month. Here's a very important tip for you. Leave the calculation of the totals to the very last step after you have classified all the items in the cash flow statement. You should be reasonably comfortable that you have classified them correctly before proceeding to calculate the totals. This will reduce the number of times that you have to recalculate the totals every time you reclassify the items. For example, changing allocations between operating, investing, and financing activities. At the end of the day, what's the point of recording and reporting for the cash transactions? As we have learned at the start of the unit, accounting is about recording and reporting for financial information to assist with decision making. And this is where advice comes into play. In the next slide, we'll be looking at some of the uses of the cash flow statement that has been prepared. Here are some of the uses of the cash flow statement. Firstly, the business may use it to assess performance by comparing cash inflows and cash outflows with the budget, which was what was planned, or perhaps the previous period, such as last month, last quarter, or last year. This comparison allows the business to see if it was better or worse in its management of cash. The business may also assess performance by calculating and comparing financial indicators with the budget, previous period, or industry benchmarks, which is comparison with the competitors. Again, this comparison allows the business to see how well it manages its cash. Financial indicators will be explored in detail in later topics. Next, the business may also use the cash flow statement to identify if the business is generating enough cash from operating activities to fund its investing activities, such as purchase of non-current assets, or perhaps to fund its financing activities, such as the repayment of the principal loan amounts to the bank. As we can see here, the first three uses of the cash flow statement helps with the analysis, and the whole point of this is to help with decision making. From this information, the business can use the information to help in its plans for future cash activities. Here are some tips that you should remember when you are preparing the cash flow statement. Firstly, you need to memorize the format of the cash flow statement, including the headings. Secondly, work from the bottom up. Start by classifying the items in the financing, followed by the investing activities and operating activities sections. Only cash transactions are reported in the cash flow statement. Similarly, Only GST received on cash sales and GST paid on cash purchases or expenses are reported in a cash flow statement. Next, all GST items, including GST received, GST paid, GST refund, and GST settlement, are reported under operating activities. Interest expense is reported under operating activities, while the principal loan repayment is reported under financing activities. Lastly, don't ever report sundries as a whole total in the cash flow statement. It must be itemized and reported based on the individual transactions, for example, payment of expense and purchase of equipment.